All right, so let's jump in here with class 9 of the day trade course. So this class is all about stock scanning with trade ideas. Now, a little later in the course, I'm going to walk you through demos of different trading software, and I'll include trade ideas again. We'll also walk you through eSignal, Lightspeed, DAS Trader, Benzinga, TD Ameritrade, and a few other platforms. And I'll probably keep adding platforms sort of as people request them. But for right now, this class on stock scanning is important beyond just a platform demo. It's important because I use this software every single day to try to find stocks to trade. I mean, literally, this is, as I've said, my secret weapon. Today alone, I found a trade off these scanners. I made 2,600 bucks in and out, and I'm done. If I didn't have these scanners, I wouldn't have found that trade today. And that's true of the majority of trades that I've taken so far this year. So and last year as well. So literally hundreds of thousands of dollars in gains thanks to trading off these scanners. So I really cannot underestimate or understate the importance of using these scanners. Now, the scanners are not that expensive. It's $99 a month right now. I use the basic subscription. Actually, that's not true. Well, it's true. I use the basic subscription. I have the premium subscription, which is $199 a month, but I don't use any of those features. Okay, so if you want to use the tool in the same exact way that I'm using it every single day, $99 a month. Now, you guys can sign up. If you do, you can use a coupon code, all capital letters, Daytrade Warrior 15. That'll save you 15% on your first purchase. So whether you buy a monthly or what would be smarter is an annual, you'll save 15%. Okay, so again, what I'm going to do is walk you through how I'm using these scanners every single day, and then I'm going to show you how to build them, how to refine them, how to create your own set of scanners. And so one of the things that I asked you guys to do, sorry guys, my headset cut out. Let me plug this back in. Sorry about that. So again, as I already said, let's see. We'll jump in here to topic for today. So today we're going to be going through how to build a scanner and really how to use this tool to find the type of stocks that you like to trade on any given day. All right. So we've obviously we're at a point now, kind of looking back. In the last 8 classes, what have we done? We've helped build a foundation, right? So classes 1 and 2, we talked a lot about risk management. Class 3, we got into stock selection. Class 4, daily chart patterns. Class 5, intraday chart patterns. And then classes 6, 7, and 8, we dived into my actual trading strategies with the entry indicators, the exit indicators, and really a breakdown of how I trade the market every single day. So during those classes, we made mention of the importance of scanners. The fact that I use scanners every single day to find stocks to trade, whether they're off the gap scanner for gap stocks, the high day momentum scanner for momentum stocks, or the reversal scanner for reversal stocks. If I didn't have those tools, I wouldn't be able to find stocks to trade. All right, so that's why this is important. Scanners are literally how I find 90% of my trades. Now, as part of this class, I'm sharing with you guys the scanner settings that I use every single day. And these have taken me years to develop. I mean, and I'm even refining them in the last few weeks and few months to just, adapt them to current market conditions and to make them even better. So if you were going to try to start from scratch to recreate my suite of scanners, it would take you a really, really long time. So I'm helping you kind of jumpstart that whole learning process by handing you the settings as they are today, as I use them, so you can jump in and start seeing the same feed of stocks that I'm looking at and analyzing to decide whether or not they'd be good for trading. So just like charting software, just like your broker access, you need scanners. All right, you need a way to find stocks. And fortunately, you guys are all in the day trading chat room, so you're able to see my scanners on screen share. So, because of that, you don't need a subscription right now if you're on a budget, if you don't, want to, get signed up to Trade Ideas, and that's okay. But I suspect you'll get to the point where that $100 a month is worth it, and you'll want to go ahead and sign up. So when you get there, this class is something that you could, of course, watch again. Now, with Trade Ideas, there are, an infinite combination of scanner settings that you could create, from very simple scanners that cast a wide net and will bring you back a large number of stocks, to really complex scanners looking for very specific patterns and very specific types of stocks. If you obviously go complex, you get a small return on that scanner. So it scans the whole market. It might only find 2, 3, or 4 stocks that meet your criteria. But if those stocks all have home run potential, it doesn't take too many stocks with home run potential to hit your daily goal. So one of the things that I've talked about in this class and in some of the seminars and webinars that I've done over the years is that kind of question of what's more important, the right tools or the right skills, right? Because, this is something that traders sometimes ask. You guys are all here because, you understand that you're getting the opportunity to learn, and that I'm helping teach you the skills, and that these skills will hopefully carry you through a lifetime of trading the markets. But, at the same time, with even the best skills, using the wrong tools is probably not going to yield good results. So something that I sometimes think about, if you compare 2 carpenters, one carpenter with 30 years of experience and then his apprentice with 3 months of experience. The carpenter with lots and lots of experience will very likely be able to make something incredible using minimal tools, using not the best tools or using an older tool. Whereas the new carpenter with 3 months of experience, you can give him the best tools in the world and he's not going to know what to do with them. So I think that example sort of emphasizes the importance of experience in general, and that tools are important, but only if you know how to use them. And if you don't know how to use them, then they're almost useless. So at this point in the class, where you guys have been building your experience, learning these skills, I think it's time to introduce you to some of the tools that will be a good match for where you're at. Okay, so as we jump in here, you can see this is one of the layouts that I have of my scanner. So you can see we've got my high-a-day momentum scanner right here. I've got my gap scanners right here. I've got reversal scanners here and here, here. Up in the corner, we've got the more info. So this is my scanner suite. And each one of these windows is searching the market for stocks that meet my criteria for having home run potential. Now, I want to remind you that I don't spend a lot of time looking at daily setups, and I don't spend really any time scanning for strong daily setups. And the reason is because even if you have a stock with an incredible daily chart, if you don't have high relative volume, if you don't have that intraday catalyst, it's very rare that that stock will make a move, right? So, it's the chicken before the egg. Which drives the stock? Is it the strong daily chart or is it the intraday pattern? It's almost always the intraday pattern that gets the stock started, and then having that strong daily chart, like a breakout setup or something like that, is going to make more traders who pull up this stock and see it spiking up recognize the strength and the potential. So my focus then is looking for those intraday charts that are just starting to break out, and then I go back and I check, okay, how does this chart look on the daily? I know some traders spend time analyzing daily charts and kind of looking at daily patterns and creating nightly watch lists. And most of the time, they don't end up trading off those watch lists because unless that stock has lots of volume, it's not going to be in play. And that's even true if you're a swing trader, because you still need that catalyst to create the momentum to give you that resolution. So that's sort of my intake, my take on daily charts and spending your evenings studying them. I think a better use of your time is to spend your evenings studying the intraday stocks that were really, really strong, and going back and kind of getting a sense of, okay, this stock went from $3 to $8. What could I have done differently? What could I have done better on this trade? How could I have capitalized on this opportunity in a more powerful way? I think that is a much better use of your time than to scan daily charts and try to put together nightly watch lists that 9 out of 10 times you won't trade off the next day. All right, now when it comes to pattern scanning, this is something that's really complex, and even for advanced computer systems, scanning for patterns is not an easy thing to do. And let me just show you, for instance, here, I'm going to drag over this chart. So this here kind of looks like a bull flag, but part of the reason it looks that way is because of the way we've oriented our chart. If we're looking at the chart like this, it doesn't really look like a bull flag. And so you think computers, they're basically looking at charts like this. They don't know that you have a candlestick formation. All they have is the high, the low, the open, and the close. So how do you take those data points and understand what a pattern looks like? What does a bull flag look like in a very just technical sense, not in a design sense? And that can be really challenging. And so there aren't a lot of scanners that are really good at finding patterns. And it's because patterns are sort of, something we see with the eye, that yes, they are the result of, numbers coming together, but there's so many variables between this pattern and this one. These are both bull flags, but this one is very different from that one. So finding that kind of common ground where we're looking for, this pattern and telling the scanner what to look for, I've found, and kind of using a lookalike, I've found that most of the scanners I've ever tried to create are really not very good at finding, finding patterns, right? It would be very rare to find a scanner that says it's a bull flag scanner. This scanner identifies bull flags, or this scanner identifies flat top breakouts. Those are just not the type of scanners you see. What you usually see are scanners that look for stocks hitting high of day, high a day scanner, high a day on volume, low a day scanner, low a day on volume. Those are extremes. Those are easy things to scan for. And there's not really a pattern there. It's just quite literally the stock is either hitting new highs or hitting new lows. So I am going to get into showing you my approach for pattern scanning, and take it for what it's worth. Even the scanners that I've developed for pattern scanning, I don't really rely on that much. And I'm always trying to improve them. Even in the last few months, I have one that I'm going to share with you today that I've been working on, but it still is not something that I base many trades on, because it gives me false alerts. It's not quite fine-tuned. I tried to make it so filtered that it wouldn't give me junk, but then it also misses some fairly decent setups. So, this, for example, trying to find a stock that is pulled back after a quick move is very difficult. In my mind, I might know exactly what I want it to look like, or what it should look like, but then telling that to the computer in a language that it can understand and that it can search for is not so easy. So, again, we'll jump into this in a second. Another thing that's kind of interesting is that traders have asked me in the past, well, Ross, why don't you build a scanner or an algorithm that simply trades your strategy for you? Then you'd be able to not just make 200,000 a year, but maybe, 500,000, 900,000, maybe millions of dollars a year. But of course, that would mean relying on a computer to trade my strategy. I have not been able to get any of my strategies to the point where it was able to run profitably, completely independent of an actual trader, of me going in and weeding out the good stuff from the bad stuff. And I'll show you in this class, a few of my kind of attempts at that, and also show you some of the current metrics of the scanners that I use if you were to trade off it blindly, taking every single trade, and you'll realize that you would not make money unless you maybe didn't have any commissions whatsoever. All right, so the first scanner that we'll look at is our Gap and Go scanner. Now you guys understand this is the scanner that I use every single morning. So, of course, today's a Monday, and I was super excited this morning knowing that I was waking up and it was Monday morning. So, I think that I'm very fortunate to have a job that Monday morning comes around and I'm excited, right? I am. I am genuinely excited. I wake up excited and I just enjoy Mondays. So, let's see. Let me just cancel. I've got a alert window up here. Alert configuration. Okay, so you can see here, this is my Gap scanner, and this is what I do every single morning. I wake up, I grab my laptop, and while I'm still in bed, I open my laptop and I kind of orient myself for the day. You know, what are the stocks gapping up? What are my gappers for today? And I can pretty quickly tell whether today is going to be an easy day or a difficult day just based on my Gap scanner. And I knew today was not going to be easy. I knew that because the top 5 gappers were all stocks that I wouldn't trade. You know, they were heavy float, being, you know, close to 100 million shares, like this one, 158 here, 82, 99, 406. So those in white, I already knew I wouldn't trade. Now the reason I've color coded the scanner like this is so my eye can just simply quickly go to which stocks look the best. Now this stock had very high relative mentions on social media, which is why it's colored in yellow. The way I do the coloring, and obviously I'll walk you through this when we do the platform demo as well, but you go to properties and there's a couple things you can do. You go to properties, just right click anywhere on the window, and you can select your colors. Now this chooses the colors for all of the stocks on here. So my current scheme is, green to red based on what data point? And it's based on the gap. I could do it based on the price, right, if I wanted to. And now this is coloring based on the price. I could do it based on, any number of data points, almost an unlimited number of data points, really. And this would be depending on what you're looking for. For me, it just seems to make sense to do the gap based on the percentage, but like I said, you could do price, you could do distance from inside the market, you could do bid size, et cetera, et cetera. So that becomes the color scheme for your entire layout. Now, let's see, if I move this just for 1 second, let's see, or I'll just close this and we'll jump back into it in a minute. This right here in the background is trade ideas. And I think, we've been jumping in and out of this window so much over the last 8 classes that this is probably familiar at this point. But I simply load it from, my desktop down here. I just click trade ideas. I have it pinned. So, you can right click any platform or program, pin it to your desktop or to your nav bar, whatever this is called. And it's always going to be there. So I open trade ideas and this is the layout. Now, for those of you who are getting a copy, who are using Trade Ideas right now and are, actively looking for my scanner settings, you'll be able to go to the downloadable assets as part of Class 9, and you'll be able to actually download my scanners. So when you download them, you'll get a link, and that'll give you a downloadable file. So, you download it, and you'll click on your, let's see, you'll download, then you'll click right here to grab your download, show all downloads, drag the file over to the desktop or something like that, and then you go to File. Once this is open, you go to File and you say Load Layout. And then you simply load the layout that you want. And you can see these are all my archived layouts. I mean, I could go back here and we could look at a layout from, let's see, the oldest one I have on this computer is 2014. So let's see what that looked like. Things were organized a little bit differently back then. So, these were the scanners I was using at that time. I had Jeff's reversal scanner, I had earnings plays, I had gappers down at the bottom, relative volume leaders, stocks surging down, stocks surging up, and then this multi-strategy window, which was looking both for bottom bounces and for volume spikes. But for those of you looking for my latest layout, you would go to File, you would go to Load Layout, and you would grab the layout on the desktop wherever you saved it. So if you went to Desktop, or maybe you go to the Downloads folder, etc. So you grab it. This is the current version on my computer. You guys will have one that's named differently. So I open this layout. And you might have your windows all stacked on top of each other, and you kind of have to space them out and stuff like that. But these are the windows that you'll see. All right, so I'll let this get loaded. Now, once you've got these open, you'll realize that most of these scanners after hours are going to be gray. They're not going to have any data until the bell rings. Now, if you want to pull data, you can right-click them and do historical data, and then choose the time frame. So for this one, for instance, I could say, this morning, and click OK, and this will give me the list of all the stocks that hit this scanner this morning, which is really cool. It allows you to create a scanner and then go back and actually see what were the stocks that were hitting the scanner at this time, and then you can go look at the chart and see how you would have traded it. And Joanne, this is a very simple program. The requirements are really minimal. It doesn't use that much bandwidth at all. I can check to see, where it's at on my computer, but it's not something that you need a super fancy computer for. You would need a fancy computer really more for things like, the charts and stuff like that. If you can see right now, this is my task manager. So I've got the recorder, which is recording this, my virus scanning, eSignal, which is running pretty heavily, Firefox, Chrome, PowerPoint, Paint, Skype, so it's like obviously, oh, actually this might be just alphabetical. Let's see. Let's go into here. So you can see based on percentage of use. No, I think maybe this is, pretty close to where it's aligned anyways, but Trade Ideas is super minimal. Like it's really not using much CPU and not too much memory. So anyways, that's just to say it's not like a hog on the computer resources. So when we jump back in here to the gap scanner, I'll go back to time frame and use historical date, and we'll look at the scanner for 9 a.m. Today. So I'll change that to 9 a.m. And now here's the scan. So the way I choose to color these, to get back to that, is really just to draw my eye to the things that are important, and you could choose what's important to you, maybe slightly different than what's important to me, although if you're trading the same strategy, it should be more or less the same. So the float column, to color a specific column, you right-click the header, and then you go to Custom Colors for Float. And now this will bring up a window here where I can sort my colors. So I like to use yellow as the one to catch my attention. I use that consistently on all my scanners. Green is good. White is basically I don't care. All right, bright red and bright green are also significant. So here I've colored this so float below 5 million is yellow because these are the ones that are the stocks that really have big potential. Under 10 million, is kind of a lighter color, and as it starts to get higher, it starts to fade all the way back to white. No coloring specific for the float or for gap, although realistically, it might not be a bad idea to add coloring for float, because if you have a stock that has float of more than maybe 40%, it's significant. So how would I do that? I could go in here and say, let's see if I click on that. So I could say if the gap is, if the short float, so let's delete that. Obviously we're not going to have anything that's negative, or we shouldn't. We're only going to have stuff that's positive. So let's add a new one for anything above 25%, and we'll make that yellow. All right, whoops. Oh, this is changing the spectrum. Okay, so that's fine. So we'll do 25, let's do 25%, and we'll change this to yellow right here. And then I'll say add. And now I'll go to this one, and I'll change it back to green, and say okay, add. I'll change 5 to kind of maybe a lighter green, and then we'll change 0 to, or we'll keep that at actually, you know what, let's just kill 5. We'll just do these 3. All right. We do that, and now suddenly I'm getting some more color here. So 45% is interesting. Obviously, though, if you color every single column, it's going to be kind of crazy. So, but this is significant because if a stock has very high levels of short interest, then there's a higher potential for a short squeeze. Volume today is colored. The heavier the volume, the darker it gets. Just high volume is not as interesting, but this isn't, I'm not even sure if I colored this. This might have been a default coloring. Days away from earnings, only gray or orange. If we're within 1 day of earnings, then we know that that's the catalyst. The stock just reported earnings. If we're further away, then we're further away. And by the way, some of you guys who are watching this recording or who are watching this live class, lesson 9 may not be available yet, and so the scanner settings won't be downloadable until you get to lesson 9. All right. Volume on the last 5 minutes. This shows the volume spike, telling us which stocks have lots of volume, etc. Relative activity on StockTwits. So, as we talked about in class 2 or class 3 on stock selection, my process each day is I look at the stocks gapping up. I look at the top 5, and generally I want to see, some good gappers in the top 5. So today, the top 5 was really not as exciting for me because these were all stocks that either were high priced or high float. Now, if I use historical date of Friday, so 9th, 7th, we can do a scan there, and we'll see what this looked like. Let's see, time, there we go. All right, so you can see this had LEDS, the lower float stock, a little higher, ATEC, NXTD, so this one looked a little bit better. Let's go back another day to the 6th, let's see, and click OK. So any day, when I set up my scanners in the morning, I just don't know whether I'm going to have a, home run stocks or it's going to just be a slow day. This is a day where I've got 2 stocks at the top of the scanner that are both really low float. There's a good chance that these will be in play. They both have good volume. So that tells me, okay, today's a day where low float stocks will probably be active. So even if I decide I don't want to trade either of those 2, there's still a good chance that other stocks will start to move up on sympathy. All right, so we got the sympathy momentum opportunity. So let's see, this, tried to type it in for the 5th. So this one, was not as great. Some higher priced stocks, higher float. I remember that day I was kind of a little iffy. We'll go historical date. We'll go back all the way to the 3rd, which was, I think that was the first day. Yeah, that was last Monday. So this one, we had a couple low float stocks again. And I was like, this is a day that's looking interesting because we've got 1, 2, 3, 4, 5, 6 low float stocks, near the top of the scanner. I mean, these are, these have potential. They all had potential. And so those are ones that I was especially interested in. Now today, the trades that I took a couple trades. I took a trade right out of the gates on CETX right here, and let's just back this up. I'll show you here. So what would you guess would be my pre-market entry? What would be my trade once the bell rings based on this pre-market chart? Why don't you guys call out the price? So I will draw some lines here. Let's see, so we've got there, and you can tell me which price you think would have been a good price. All right, so Corey says 390 over the pre-market highs. Now, Antonio says 370. Eduardo says 360. Chris 360. John 360. Chris Olson says 350. Yazin says 359. Okay, so, and we'll make this a little bit bigger. Now, based on this pre-market chart, the entry that I liked the most was over 360 because we had pulled back and we'd consolidated here just for a moment. So this was sort of our pre-market pivot. All right, now the high of 390 was too extended because that's already 30 cents away. Just between getting in at 360 and having it pop up to 390 is 30 cents of profit. So I wanted to capture that profit. Now, if we were consolidating up at the very top of this range, then I would have said, yeah, let's get in at 390. But because it had pulled back, I said 360. Now let me pull this up here, today's scanner, and we can look again at let's see, 10, oops, sorry. 10th. And we can look at CETX. So CETX here was our, the first stock on the scanner that was interesting. 17% gap, 5.3 million share float, gapping up with 10,000 shares of volume, but that was at 9 a.m. There was more volume by the time the bell rang. So my entry, the place I was watching was 360. So pre-market, knowing that 360 was my entry point, I had my order ready to go. Now, as soon as the bell rang, something interesting happened. Here's just a little bit more pullback at 360. That might help you visualize. Just when the bell rang, and I'll pull this back here to, let's do a 15-second chart, just because this was a very quick trade. It was not a lot of opportunity, but you know, it did end up working. So let's see. Okay, so that's our pre-market chart, and we already know we've got a line drawn at 360, and I've got my order ready to go to get in at 360. Target is high of day, which is 390. All right, and I took 2,500 shares. So the bell rings, and look at this. We open, and we dipped. The high was 51, and the low was 44. So we dipped down for a second, and I thought to myself, if this comes back up above the $0.50 of 350, that we should immediately go to 360, break that pivot, and then the target is 390. So I got in this as it came back up, looking for the break over 350. I got in with 2,600 shares. It was a partial fill. I tried to get 5,000, but I hit 2,500 once, and then I filled another 130 shares of the second order at 350. And you can see here, it was almost like a momentary red to green. We dipped down for a second below the $0.50, and as we came back up, I got in. Now, you could have waited to get in at 360, and that would have been okay too. I just got in a little early at the $0.50. We pop up, and then we have a little bit of a micro pullback right here at 66. A little micro pullback here, as you can see. Kind of moment of, moment of truth. Is it going to go or is it not? It pops up to a high of 74. And then it rolls over. So, this was it was a short trade. It was only about a minute long, but I got in at 350, looking for the break over this pivot. We did break that pivot. We popped up to a high of 74, and on this candles, we came back down. I said, that's it. I was very interested to see the volume after this little micro pullback here at 366 to see if it would break over that level. And it did, which made me think, okay, this looks good. 374, now 375, 380, 390, $4, but it just couldn't do it. And for whatever reason, it got a little heavy and then dropped back down. But the fact is, this was an entry based on the pre-market flag, the pivot at 360. And if you had hotkeys, there's no reason you couldn't have gotten in and gotten out quickly. So 2,600 shares, and I made like $440 on it. From, I think my average was 48, getting in just under the $0.50, and I sold half at 70 as we were popping up, just to take profit. Not because I saw anything bad, but I was like, I'm up 20 cents. I'll take half. And I did that also because I was like, this is Monday morning. Let's just be smart, take some profit. You know how quick you can go from being green to being red. So I was like, I'll just take some profit. And then as it started to dip back down below 70 and at 65, I said, that's it. I'm going to bail, and I bailed out on the rest. Okay, but I found this right off the gap scanner. Now, once the bell rang today, we had this one trade, which was the only trade I was really watching off the gap scanner. So my watch list was really only like one stock today. And then I was like, okay, well, now what, right? Do I throw in the towel on the day? It's 9:33. Yeah, I've got $450 or whatever. It's not bad, but now what do I do? So this is when I start to switch gears, whether it's at 9:33 or I have the opportunity to trade those gapper stocks, for maybe a couple others up to 9:45. But at a certain point, I switch gears. And hold on, let me go back here, get you on the right slide. I switch gears and I start looking at my momentum scanners. All right, so these are the scanners that I use for finding momentum, the stocks that are surging up. And today was a great day because I found CYCC hitting the scanner. Okay, so this scanner is looking for stocks hitting new highs. Now, if I back out of this for 1 second, let me actually show you what I should have showed you here actually on the gap scanner is the actual settings. This is a very simple scanner. It's really not looking for anything that complicated. I go to configure and I go down to advanced, and you can see here, this is casting a wide net. All we're looking at are stocks that are priced above $1, gapping up or down 4%. That's it. That's it. I mean, it's simple. It's not a complicated scanner. This is searching the entire market for stocks that meet that threshold. Now, I could probably increase this to 10%, and that would probably be okay. But there are some days where there's a stock that's gapping up only 4.5% because it's doing something. Oh, CNAT is a good example. Look at this stock, CNAT. This one this morning was gapping up just slightly. It was only gapping up slightly, but it was significant because it was continuation on the previous day, right? So even though it was only gapping up maybe 2 or 3%, it was continuing this strong momentum with a good daily chart, which made us think maybe it could go further. This one also choppy out of the gates, dropping 30 cents and then squeezing up about a point or a little less than 60, 70 cents and then pulling back, a little choppy. But I like to cast a wide net so I can see what's out there. And the gap scanner is never so big that I don't feel like I'm able to really understand everything that's on that scan. Now, when it comes to our high day momentum scanner, you can see the strategy name here: massive volume, low float. Medium volume, $10 and up. Medium volume, $1 through $10. Those are all different filter sets. So each one of those are basically a mini scanner looking the whole market for stocks that meet those criteria. So this high day momentum scanner actually has, I think it's 7 or more scanners built into it. So if I right click this, I can see my strategies: 1, 2, 3, 4, 5, 6, 7, 8 scanners all built in. And all of these are looking for stocks hitting high of day, but they all have slightly different data sets to look for different criteria. And also to separate the scanner, because it's one thing to just look for stocks that are spiking up. It's another to be more specific and say, this is a stock under $10 spiking up. This is a stock under $10 and with a float of under 10 million spiking up. That's when you start to really, get more granular with the type of stocks you want to look at. By doing that, when you get an alert on some of your best scanners, you're more likely to jump on it. If I just simply had one scanner looking for stocks hitting new highs, casting that wide net with this type of scanner, there'd be so many alerts, I wouldn't be able to act as quickly. So today, let's pull this back here. We had CYCC. So CYCC hit the scanner here. Actually, this is actually an interesting example. It hit the scanner at 9:38, CYCC. So at 9:38, we spiked up from, let's see, it was $6 to, well, we went all the way to a high of 720, but we pulled back right here. We had a high of 690, and this gave us, see, a 1 minute micro pullback. Now, the advantage of being in the chat room is that someone called out during this 1 minute candle, hey guys, look at CYCC, it's spiking. At that time, CYCC actually didn't fit the filter requirement for this scanner. It never actually met the requirement for massive volume, and that's because the relative volume has been so high looking at the 4-day average. Yes, it was very low on Friday, but you know, Monday, Tuesday, Wednesday, and Thursday, the volume was high enough that the average is high. So even though we got a spike of volume today with 2.5 million shares, in this little area here, it didn't have enough volume for the scanner to think it was really significant. But what do you notice about this daily chart? What kind of chart is this? I mean, this is a bull flag. It's not the cleanest because you have a doji at the top. You know, it's definitely retraced more than 50% of the gap, but it is a flag. And today was the first candle to make a new high, and that was significant. So when I pulled this up and saw that was happening on this second 1 minute candle, as it dropped down, and on this one again, we'll pull up the 15-second chart just to kind of get a little bit more detailed on it. Let's see, we'll pull this back here. Yeah, this is good. So this pops up here to a high of 87, and then drops down, and on this candle right here, we dropped down all the way to 17 as we came back up and broke over what level? The $0.50 I got in with 7,000 shares. I got in with 7,000 shares, and we popped up to 690. We pulled back right here, and then I added for the break over 690, and we got the pop all the way up to a high of 724. We consolidated, and then we dropped down, and as we dropped down, I bailed out. So, and then I actually got back in with a small position right here, and I stopped out here for a loss. But in total, I made about $2,500 on this trade. It wasn't the cleanest one ever, but the entry was based on the break over the $0.50. Now, if I had missed the break over the $0.50 and I didn't have the benefit of a chat room, I wouldn't have seen it until it hit the high day scanner. And you know, that would have been, I would have been a little bit behind there, but you still had this good 1 minute micro pullback. 1 minute micro pullback, which broke to the upside. So this kind of highlights the importance of being, you know, number one, in the chat room every day because you get good ideas. But then, you know, number two, these scanners, in most cases, will alert you to stocks doing exactly this. It just so happened that because this had high volume in the last few days, that the average volume was a little too high. All right, so the way I've broken down this scanner is, again, the strategies that are priority, massive volume and low float, bright yellow. High volume with low float is a lighter shade of yellow, and then the others are green until we get to daily breakout, which is purple, and stocks above $10 are blue. Because I don't usually trade them, but you know, if something shows up, I'll take a look at it. Now, I've done the same thing where I highlight the float because I want that to stand out. And then what I also did is I highlighted the volume in the last 5 minutes. This CYTX had massive volume on the 5-minute candle, 168,000 times above average, and it was up 51%. So it was definitely a stock to watch closely, but the price was a little on the cheap side at $2, and the float at 18 million was a little iffy. I was watching it, and the place that I was watching this one, and we'll back this up here, oops, CYTX. So let's see. Now let's pull this back. If you were going to trade this one, what level would you be trading it? And you can see here the levels that are in play. What would your entry be? So these are the three levels, 85, 90, and 93. You guys are saying 190, and some of you are saying 185. And both of those would have been good entries. Really, they both would have been good. Getting in at 93 would have been too high. Getting in at the high of this pivot at 90 is fine, and getting in just above this consolidation is okay. I probably would have gotten in at 90, but 83 and 85 would have been fine as well. When the bell rang, I was a little bit unsure because it seemed very heavy. It dropped to 76, and then it popped back up to 90, resistance, and then it dropped back down to 75. So it was like kind of choppy, and then it popped up to 96, it pulled back, and then it popped up to 204. So it wasn't really super, super clean, especially not through here. This gave you a 1 minute, little 1 minute bull flag, really. So you could have gotten in there for the first candle to make the new high, entry at 95. The high was 208. So, you know, yes, you could have gotten in there with 3,000 shares, made a quick, you know, 250, maybe $300, but it wasn't the biggest move. And then look at that resistance that it had at what level, right? What's that resistance point that we tapped? The 200 exponential moving average. Almost to the penny. And we knew that that was there, and we knew that was going to be a problem. And that was the second reason that I was a little bit more cautious on this one and decided not to take a trade on it. So, you know, this would be a good one for me to add to the next live class because it's almost picture perfect the way we came up and tapped that level and then pulled back down. All right, so let's see. Now, so we'll jump back in here. So anyways, CYTX, yes, it was on the scanner here. It was also on our gap scanner though, so we were already watching it before the bell rang. And yeah, it did have a lot of volume, but it wasn't the easiest to trade. So let's see, then we've got our change from the close, StockTwits, relative activity, today's range. This basically just tells us the stock has a big range today. We pretty much know it just by looking at it, so it's not the most significant thing to look at. Relative volume over in the corner. Again, usually you can kind of eyeball it and realize this has high relative volume. Had that much volume yesterday and this much today, that's high relative volume. But you can kind of look at it there as well. So, you know, for the most part, you know, that's how I look at the scanner. I'm looking at it anytime an alert pops up. I'm looking at the color of it first. Is it green, yellow, or light yellow? Then I look at, okay, well, what is the actual float? What is the actual volume today? What is the price, right? What is the change on the day? Because if a stock hits this and it's bright yellow and it's up, you know, 55% on the day or 46%, whatever it might be, I'm going to be especially interested. I'm going to be like, okay, this is moving. It's already moving, right? The party's already started. The question is, you know, did I miss it? And is this, are there, you know, a lot of people at this party? Is there enough volume? What's the daily chart look like? And so that's when I pull it up and I take a look. So USEG, for instance. Now this one, I've seen this one come up a bunch. It's an energy stock. And it came up at 1:30 in the afternoon. So not the time of day I would have been trading. But if I saw this come up, I probably wouldn't have taken a trade because it's an energy stock, and that sector doesn't usually move as much as biotechs and tech stocks. Anyways, it pulled back, 1 minute pullback, maybe would have been okay. I mean, only 5 cents, but you probably wouldn't have lost money on it. So not much there. All right. You know, so generally that's my process. Now, one of the things that I can do is I can right click and I can say, let's see, I can go to properties and I can go to actions. When I go to actions, I can play a sound, set up sound, and I can choose a sound specifically for this stock. So the one that I'm using right now, I can't remember which one it is. It's like, you know, let's see, voice, you've got block trade, buy, breakout, oh man, running down, running up, sell. You know, they just draw your attention. There's a couple over here that are, you know, cash register, gong, a monkey, a pig, a pin action, etc. The only thing for me is that I actually don't need an audio alert for 7 out of the 8. I only need an audio alert for massive volume, low float. So what I did is I went to collaborate, so I can collaborate that specific scanner. I can pull this up, copy and paste it, and then I can go to a new, a new alert window. This one's a multi-strategy window with multiple strategies. A new alert window would just be one alert. I paste it in there, and now I rename it, and this one is the one that I use. The only scanner here is the low float scanner, massive volume low float. And every time, because I went to properties and I turned on the actions, every time one of these fires off, it also hits on this scanner at the same time, same exact scanner. This one makes the audio alert. So this could just as easily be tucked behind here because it's not really showing me anything different than what's on here, but I just left it there so I can go back and see which low float stocks we're moving up today. So that's the way I turn on audio alerts for just one of the 6 or 7. Because if I have them on for all of them, I'll start ignoring them. And I know that for a fact. That's what I do. If I have audio alerts for, 5 or 6 or 7 different scanners, I just eventually stop listening. It's incredible how easy it is for me to ignore a gong or a cymbal, but I do it. So I'm very selective about which alerts which scanners I'm willing to put an alert on. Okay, so let's see. Now, one of the other scanners that I've used over the years is my Surging Up scanner. Now, this is kind of an interesting scanner because what it's doing is it's looking for the stock right now in the entire market that has the highest relative volume in the last 5 minutes. So this is a great scanner to use in the afternoons because if a stock is on this scanner right now, it has volume, and we don't know why. So it's a great scanner just to help you kind of have that, your finger on the pulse of the market and where there's volume. You'll rarely see stocks like Apple or Facebook on this, even if they have a lot of volume, because their relative volume will rarely be 4,700 times higher than average. All right, so that's why this is usually going to be giving you lower price stocks. So a scanner that can kind of help you see, what's active in the market. And I think I've got my Surging Up scanner here, right here over on the side. So at any given time, that can kind of show you, what's moving in the market. And sometimes you'll be able to look at these stocks to get an entry off the first pullback or a second pullback or something like that. They may be setting up for a bull flag or something similar. The ranges, Lewis, for the scanners, I usually set the volume threshold pretty high. So it's at like 2,000 times higher than average volume. We can look at our massive volume low float one just to see what the stats look like. So we go to advanced, we go to the configuration window, and literally this scanner, let's see, you can see the filters, or where was it? I don't know where that was. These are the filters currently being used. There's 2, 4, 6 filters and 1 alert type. Now, if I search for alerts, I could, let's see, more. These are all of the different types of alerts that you can use. Those are the type of alerts. So that's the scenario that triggers the stock to show up on the scanner. That's a lot. It's a lot of alerts. Now, you have an alert, and the one that I'm using is new high. Stock is hitting new high. And then you have the filters. So you have all the stocks that are hitting new highs, and then how do you filter down that list? Now you filter by float. Float on only 10 million shares. You filter by price, between $1 and $10. You filter by daily relative volume, which is 2. The volume today, which is 40,000 shares. The 5-minute volume, 2,000 times higher than average. And that's it. So this is a stock that has 2,000 times higher than average volume in the last 5 minutes, price between 1 and 10 with a float of under 10 million shares. That's the basic breakdown of this scanner, and that's what we're looking for. So now my my low float medium volume scanner, I could do something like the volume is at least 500, right? But then it's going to be showing me those ones plus these ones. So now I need to put on a range. I need to say it's between 500 and 2000, or 1999, and anything 2000 and higher is now going to switch to this one. So that way you're not overlapping your scanning, because if you do, well, you're getting the same results in two different feeds, and that's distracting. So that's where you, again, get granular and you say, this is the specific range that I'm looking for. Now, it's okay if the one on the very top is anything above this, or the one on the bottom is anything below this. But the ones in between, you want to make sure you bracket them so you're keeping the extremes separated to their own scanners. All right. Now, I can choose my exchanges. I obviously don't do OTC, and I don't do Toronto Exchange. I don't do pink sheets. I don't do indices. But I am going to do NASDAQ, Amex, NYSE, and NYSE. I don't know why they're on there twice, but you could also do something like, let's see, you could exclude the following lists, and you could create a list if you wanted to of certain things. You could say exclude these stocks. I don't want to see them on the scanner. You could say exclude, energy, or exclude. You maybe have a no trade list. You have like 10 stocks that you just don't ever want to see. You can exclude them from the scanning, and that's fine. But I generally don't have a problem with having them on there. The one time that you might be more serious about excluding certain indices, certain sectors or things like that, is if you planned to trade off this scanner blindly, where you literally take every single trade that's alerted and you build an algorithm and a black box trading system around these scanners. Now, I'll tell you, I tried to do that on multiple occasions, and I was never profitable. So I'll tell you more about that in a moment. But for right now, just know that I don't do it because it's not the purpose of these scanners for me. Okay, so jumping back in here to the slides. So our surging up scanner, we've kind of broken that down. And then we have our reversal scanners. Now, generally, I would consider my scanning software to be divided into two categories: momentum on the top and reversals on the bottom. Those are the two types of strategies that I trade. I mean, momentum and reversals. We've talked about that classes 6, 7, and 8. So when I'm looking for reversal stocks, what type of criteria am I looking for? I'm looking for the 5 consecutive red candles. I'm looking for the RSI to be high or low, etc. And these are the 4 scanners that I've created that are looking for those types of criteria. And you can see them over here. Actually, one of them's not there, and I just minimized that one. But let's see, parabolic stocks. And I actually don't trade off the parabolic stocks really whatsoever. These are the 2 that I actually trade off of. These 2 right here. This is a newer scanner, the 1-minute reversal scanner. It wasn't in this release with this image. This had the 5-minute reversal scanner, parabolic moves, and then it had consecutive candles going up and down, one or the other, and extremes on the RSI. RSI below 10 and RSI above 90. Now, that was relatively helpful. I mean, that was definitely showing me the stocks that were at extremes, but I wasn't finding that I was trading off of them. And I'll just pull those 2 scans up here so you can see them. It just sort of became noise. I mean, I hate to say it, but it just kind of became noise, and it just wasn't really watching. Now, the scanner that I might like the best of the 2 would be the consecutive candles. I don't really care that much for RSI because it's not uncommon to see a stock with a really low RSI that's just kind of slowly selling off. It's not really that stretched out. You're not really at extremes. This one's not the best example, but for that reason, I am not using a dedicated RSI scanner. Having said that, this is our 5-minute reversal scanner. So let's look at one of the strategies. It has 4 strategies built in, 2 for tops and 2 for bottoms. So let's see, we'll just do a top reversal and we'll click configure and advanced. So this is going to, and let's see, which is this, the V5 or the V8? This is the V5. No, sorry, this is the V8. So this scanner has a lot of filters, as you can see, priced between 15 and 250. We need at least 4 consecutive green candles. All right, that's significant. And we need a relative volume of 1.25, just slightly higher than average. Volume today, 500,000 shares, higher volume. Scrolling down, scrolling down. Position in the Bollinger Bands is 100. So what does that mean? That means we are literally at 100 and this stock is about to be outside the top of the Bollinger Bands, which is good. That's what we want to see. It's either, this is for the top reversal, it's 100. For the bottom bounce, it's 0. So we want to see that extreme. If I turn on my Bollinger Bands here, we'll see what they look like. So remember, how we talked about the candles being outside the Bollinger Bands. I can actually train the scanner to look for that. And so you can see right down here at 329, you have this at 230, 220, we're outside the bottom Bollinger Bands. Down here, we're right at the very bottom. Right here, we're outside them. These are the times that I want alerts because sometimes they will give us these bounces here and here and here. V5 was version 5, and V5 does not include Bollinger Band filters. V8 is version 8, and it does include Bollinger Band filters. Change in the last 30 minutes is 50 cents. Now, I like to see a big change in the last 50 minutes because I don't want to take a reversal on a stock that's just, kind of dropping 5 or 10 cents. I need to see the rubber band. I need to see it's extended. RSI needs to be above 75. Again, I want to see that extension. Distance from the VWAP should be at least 2%. I want to see the stock extended. Average daily volume, 300,000 shares. So this helps kind of give the computer some good things to look for. You give me back stocks that are, with 4 consecutive candles and, the RSI is above 75. We're at 100% on the Bollinger Bands. We've moved 50 cents in the last 30 minutes. There's a good chance this stock has potential. And that's how I've gotten to these filters. I can keep tightening it and tightening it and tightening it. And yes, Trader Joe, you can go to 110 or minus 10 on these Bollinger Bands and you'll just get further extremes, which is fine. I just found that sometimes you get your filter set to be so tight that you stop getting alerts at all. And so sometimes it's better to have more ideas, even if some of them are only so-so, than to miss what was a really good setup that just was slightly shy of meeting one of these data points, right? So that's kind of what I would do is, adjust this and then go check by right-clicking the historical data. And I see, and what I might do, for instance, is, and this is how I originally created these scanners, is I would look for the perfect reversal setup, and then I would try to make it appear on the scanner, right? So I would try to dissect it. What did it have that I need to scan for? How many consecutive candles did it have? What was the RSI that it had? What was the position in the Bollinger Bands? What was the position relative to the VWAP, to the moving averages? Any relevance on the daily chart, or was there a certain number of amount of volume? Those are the things that I try to pull out of the A quality setup and then punch that into the scanner, start scanning, and I have to start with a loose filter set to make sure I have it on there, and then tighten it up until that's kind of the only type of stock I see. And that's what will happen. You'll tighten it up, and then you're only seeing stocks that look the same as that one. And now you kind of have a lookalike scanner. It's looking for these other ones that are so similar. So let's see. So these are the 5-minute scanners. The 1-minute are some of my favorites right now because they give me quick scalp setups. So I don't know if this UNFI was worth trading, but I see we had 10 consecutive 1-minute candles. So it looks like we had a pretty sharp sell-off towards the end of the day on volume. So there's probably news on this. News trades can be a little bit more difficult to trade just because there's really something driving it lower. A couple of false breakouts. First 1-minute candle here was a false breakout. We've made 4 cents of a new high and then dropped down. This one made a new high by 8 cents and then sold off. So not an easy one. Yahoo, this one at 9:59 a.m. Let's see, we'll make this a little bit bigger. 9:59 was right around here. So at that time, did we have how many consecutive candles? It says 6. So, this one actually did give you a little bit of a reversal. You had 1, 2, 4, 6, 7, 8, 9, 10, 11 candles in a row. So when you see 11 candles in a row, you just start to think, look, the first one to go the other direction is maybe worth a stab. So you would have been short there at the high of 47.09. And you only got to drop down to 47.02. So you didn't get a big move. But remember, we always look at the first profit target, which is the 20 moving average. So your entire profit target was only 11 cents or 12 cents because the 20 moving average was at 46.98. So when you have a profit target that's that tight and the window is so small, figuring you can only capture half of it, this is probably a trade that you would have said, it doesn't even give me the profit potential to make it worth trading. All right, but in any case, I really like the 1 minute setup because usually when you have, and I'll just jump into this. So we'll look at the top reversal here. Let's see. Top reversal V5. So this is the same as this V5, except that we've now added a 1 minute criteria. So previously we were using 4 consecutive candles on the 5 minute chart, which is fine. But then I can also go grab this filter for 5 consecutive candles on the 1 minute chart. And now I have multiple time frame alignment. So I not only have a 5 minute setup, I also have a 1 minute setup, and that's why I really like the scanner. So I know that I've got a stronger setup, and it has pretty much all of the other criteria. So, we can look at this one, and let's see, that almost any time there's a stock on this scanner, it's going to be a pretty decent setup. Doesn't mean they're going to work 100% of the time. Like UNFI today, I mean, that one was, was obviously pretty extended because of news. So that one didn't work super well. We'll give this a chance to load. And Yahoo didn't have enough profit potential, but that's why you would have been able to manually avoid that trade. Now I could add a filter that says, don't show me stocks if it's only, 0.25% above the moving average. Show me stocks at least, this percentage above their moving averages. And that would inevitably make the setups stronger, but it would reduce them even further, possibly to the point where I just wasn't getting any alerts at all. And then, that's not super helpful. Alibaba was on the scanners today. I was watching this for a top reversal this morning. It's a very expensive stock at $110 a share. This is the point where I was watching it, but I was watching it right around the whole dollar of 111, and this candle kind of suddenly dropped down from 110.95 to 110.75, and I felt like, well, if I short for the first candle to make a new low, I'm already 20 cents off high a day. So that feels a little too extended, and I think that I'll skip that. I would have preferred if the candle at the very top was like a tiny itty bitty candle, because then my stop could have been so much tighter. I could have been like, the way Yahoo was like a really tall, really tiny candle, that's a better place to have a stop. So like this candle was better, but by this time we'd already had a false breakout. Now, even if you'd shorted this candle right here at 95, this dropped all the way down to 67. I mean, that's almost 30 cents of pullback, but obviously it went higher. In any case, though, that's the right type of setup to look for. And for some reason, sometimes the historical data doesn't cooperate 100%. I'm not sure why, but it's not cooperating right now. So in any case, for me, this is sort of how I have my scanner set up. I've got the momentum on the top and the reversals on the bottom. And so at a certain point in the day, I can switch my focus. If we don't have a lot of momentum, I can wait for good reversal setups. These ones, because they're so strong, also have audio alerts turned on. So I have audio alerts for this scanner and for the low float scanner, because those are the ones that are my favorite and that I find to be really that I'm most successful trading. Okay, so now, as I mentioned, Trade Ideas does have some more advanced features. There's an AI strategy window. I have not used this for any of my trading because I have my own strategies. Really, I mean, that's the reason why. I've got my own strategies that I trade. This will give you, it pre-selects a number of strategies that are currently trading on a certain percentage of accuracy, and it'll give you alerts off those ideas. So let's see. This one gave you 2 trades today, the bullish pullback scanner. And let's see. This over here. I thought that I could view trades. Okay, right click. So view trades. So the 2 trades on this one today were, the 2 alerts were W and SQM. So it alerted an entry time on this one, on W, of 9:55. All right, so we go look at this. So the entry time on this was 9:55, and I mean, seems like to me a little extended, and you held it from 9:55 until 10:41. So that's a very long hold time. This strategy holds for 6 hours or until the market closes. So, you ended up buying it at the top of this pop, holding through a pullback, and then it went higher. So I don't know about that. SQM, this one at 9:51. Let's see. To me, and I don't see the setup on this. So, that's just why I don't use it. I mean, this to me, you're going to be taking real losses if you follow someone else, right? If you simply follow someone else, whether it's the ideas of an automated system, which might be pretty good, or it's the ideas of someone in Twitter, you would have had to hold this for, a while. And, how much profit would you have made from it? What was your risk? I don't know. I don't think it's really, to me, worth it. Now, one of the challenges is that when you're looking at automated systems, they always will have better results than you can possibly achieve. And it's not an insult on any system, because I absolutely love Trade Ideas. But I know that because I've used automated systems, and I lose because I'm buying behind them. As soon as their alert goes off, they write down that's the price they're in at. But if you always enter 5 cents higher, and then you always exit 5 cents lower, you're 10 cents behind on every single trade. So let's just do some math. So let's say you're 10 cents behind on every trade, and you take every trade with 1,000 shares. So 10 cents times 1,000 shares is $100. So you lose 100. You're basically, $100 less than the system on every trade. So let's say you take 5 trades a day, you're $500 less than the system on that day. And times 25 days in a month, you're $12,500 less than the system on every single month. Times 12 is $150,000 less than the system. And if the system is only making $120,000 a year, you're actually losing money. That's the problem. And again, I love Trade Ideas. I'm not at all, saying that it's not a great platform, because it is. I just am not a big fan of automated trading systems, and maybe I'll be proven wrong. Maybe they'll get to a place where they really are super solid. But I've tried to trade automated systems, and I never found success. If I found success, I would have been doing it, because it's easy, right? Just follow what something else tells you to do. That's easy. And I didn't find success on it. So that's why I don't think you need to subscribe to that. I think if you just use the basic layout and you use these scanners, you can do really, really well. Okay, so now one of the things is that you can, something that's interesting is that you can link, let's see, where is it? Trade Ideas Broker Plus. You can link this into a broker account, and I used to link this with Lightspeed Financial, and you could build a scanner, and then you could actually have the system trade the scanner, buy 1,000 shares of every trade that comes up on that scanner. So let's look, for example, at the massive volume, medium flow. And before you get dollar signs in your eyes, I'll tell you that I've tried it and it never worked, and it won't work, in my opinion. And I'll tell you the reasons why it won't work. So, okay, so we have the, we don't go to automated, sorry. We go to massive volume, low float, and backtest strategy. So you may not have the backtest available on your the version of Trade Ideas if you have the basic version. So when we backtest the strategy, what we can do, and I swear I spent hundreds and hundreds of hours backtesting strategies because I thought, like, if I create the perfect backtest that shows that it produces, you know, these really high results, that I could then go ahead and trade it. And I realized that that wasn't the case. And William, the reason why I want you to learn about this is because I want you to understand that there are traders out there who are going to try to sell you things like this. There are traders that are going to say, look at my automated system. This is how it works. And I'm going to show you the way they make it look good. So you can go here and I can say my entry time is 9:30. My exit time is 9:45, let's say. Timed exit, you can choose to exit every trade after 60 minutes, or you can use risk management here, which is that you exit when a trade hits a profit target. So enable profit target, let's say, of 30 cents, right? If a trade goes up 30 cents, let's just take the profit. Enable stop loss of, let's just say, 10 cents, right? That's perfect, 10 cents. Okay, so advanced, we're not going to use trailing stops or anything like that. So go back to this. So this is the high day momentum scanner that I use. The scanner that I've used to make, you know, over $100,000 this year and 220 last year. So you would think, well, if I just blindly trade off that scanner, how would I do? Well, let's see. It's looking pretty good. I've got my 3-to-1 profit loss ratio, right? So once this finishes, we'll be able to kind of look at the details of it. So, you know, this is something that I could go put this scanner online and say, look at this, you know. You trade off of, you know, this scanner blindly, and, you know, this is how much money you'll make. All right, so, but this is what it actually looks like. So you have 98 trades with 29% winners, only 29% success on this scanner. The average winner is 27 cents. The average loser is 9 cents. So you've got the profit loss ratio, but your accuracy is really, really bad. Now, the thing that you can't factor is slippage. When you increase slippage, every penny it goes up, your equity goes down. So remember when we said 10 cents of slippage? I mean, you have 10 cents of slippage and here's your equity just going down and down and down. But don't forget, commissions are not $1 a trade. They're $5 a trade, right? And now you're down even further. So it makes it just almost impossible because of these two factors. Number one is slippage and number two is commissions. If you took every single trade that came up on the scanner, you would be taking a lot of low quality setups. You would get in, and because of slippage, you might lose 10 cents. On some of these, you'll lose 10 cents on the buy and 10 cents on the exit, right? So let's just say 20 cents is your slippage, because say the scanner says for one of these stocks that the entry would have been, like look at this. This is APOP, and it says the entry is at 9:30 and 13 seconds at 8:78, and that was 327. So let's just go back to that one and just take a look at what that would have looked like, because that's giving you a $300 profit on this day. All right, so 327. Now, I spent a lot of time searching for the Holy Grail and trying to create a back test that showed profitable, and I did. I created back tests that even when you look at this, were like 75% accurate with good profit loss ratios, but they were never profitable when I traded them with real money. So here's the problem. This gave you an entry at 878. Now, do you think as this stock spiked from 855 up to 10 that you would have actually gotten filled there? You wouldn't have. You probably wouldn't have gotten filled on this one at all, right? I mean, this one spiked up so fast, I got in at $10, and I'm a pretty quick trader. So, this is one of those examples. This one wouldn't have worked. Slippage, or if it did, you definitely would have gotten 10, 20, 30 cents of slippage if you used a market order, maybe even 40 cents on the way in and again on the way out. So it just didn't, they don't translate. Now, one of the things that I realized is that what you can do is, you'll see on this map, or on this day, for instance, we made a lot of money. This one was really profitable, had 3 really good winners. So what you could do is you could manipulate the scanner to only on the last 30 days give you, the stocks that were the biggest winners. And so I could go and change this scanner. So, well, maybe I don't trade anything on this day because I look at the 2 losers on this day and I realize, oh, well, or the 1 loser, and I realize, oh, well, this was below the 20 moving average. So I take that one off. And then I click on this day and I realize, oh, this was, this was $1.58. So now I only search for stocks above $1.60. And basically what I'm doing is I'm manipulating the data. I'm manipulating my scanner to filter just conveniently out all of the losers to just capture the winners. And that's fine. I can run the back test and I'll get a great result. But guess what? 1 month later, the entire market is different. So you take that same filter set and you move it and you place it here, and now it looks like this again. At the end of that month, you do the same thing. You change the filters, you change everything to accommodate this data set, and now it returns 70% accuracy. You pick it up, you put it down a month later, it's back to here. You keep doing that again and again and again. I was never able to find anything that was sustainable long term. And the guys who do that kind of thing are trading at these huge hedge funds, and they're not doing this type of thing. They're trading with 100,000 shares to make a penny. 1 penny here, 1 penny there, 1 penny here, 1 penny there, and they do that on stocks like Siri. They do that on stocks like Sprint because they trade sideways. And this traded, let's see, 300,000. This traded 16 million shares of volume today. So you could have done 100,000 share orders a bunch of times. Bank of America is a little bit more volatile. This one traded, let's see, 63 million shares of volume today. You could have traded, 500,000 shares a bunch of times. These are the types of stocks that those guys are going to look at. They're going to be moving in and out with big money. They're not looking at the stocks on the low float scanner. They're not looking at those types because they're too risky. So just like Roberto said, you're kind of like when you create these custom scanners to try to meet a certain back test, what you're really doing is, you're creating this box to fit, this certain shape. But that shape is always changing. And so when it changes a month later or weeks later, this box no longer fits and you've got to change it again. You've got to keep changing it and keep changing it. So, that's my experience with trying to do automated trading and trying to you know, kind of like hack the system to create my own like set of scanners that are, you know, the Holy Grail. And I really thought, I mean, I probably spent like a year of time, you know, at least 6 months of time working on this type of thing, and then trading it in with real money in with my Lightspeed account. And I just never found consistency ever. And now, you know, I took $583 and turned it into 100K in, you know, 44 days. So I've found my own way of trading, and it's using these scanners right here. It's pulling up the ideas and then doing just this simple kind of 6-point check. How's the volume look? What's the float? What's the daily chart look like? What's the catalyst? Is it a former runner? And if it is, I jump in on the first pullback, the bull flag, the flat top breakout. So the type of scanners that I really enjoy making are scanners that will help me find those types of stocks. Okay, so what I'm going to do here is we're going to jump in and we're going to build a scanner. And what I want you to first do is picture a pattern. So let's see. What's a good one today? I'm trying to think. Galt. I'm trying to think of some others that we had today. Let's see. Obviously, we had CETX, which was fine. We didn't have any really, really good flags today. This one actually was pretty good. LBIX, and this was at, let's see, 10.15 was the pullback, and the high was 249. Okay, so what if there was a way that we could find this type of pattern, right? And it's, again, I'll look at 10 stocks meeting this type of pattern, and if I find one that looks good, I'll trade it. All right, so let's see. I've got that there. All right. Okay. So put that over here. So let's picture this pattern, and let's try to think about what this looks like. So what do we have going on here? We've got 1, 2, 3 consecutive green candles, and then we have 1, 2 candles of pullback, right? That's what that pattern looks like. What are some other characteristics of this stock? We're going to create a new alert window, and we're going to sort of dissect this pattern and try to create the filters that match it. Let's see. So new alert window. So I want not to find this stock when it's moving up. I can already do that on my high day scanner. I want to see this stock as it's pulling back. Now, this is a little bit, you know, tricky to find the stock as it's pulling back. So let's look through our alerts here and kind of see what we can find. Let's see, we've got new high, go into more. So I could do a 25% pullback from the highs. I could do percentage up and down for the day. Market divergence, that's not going to help me. Running up, running down, that's not going to help me. These are some of the patterns, but these aren't going to help me. Opening range breakout isn't going to help me. Cheryl says a three bar pullback from previous high. All right, so let's see. So this is a hanging man candle, which is not bad. This wasn't a hanging man though. The hanging man is when you have a tiny little candle and a tall, a large kind of bottoming wick right there. Okay, so right here you've got a 5-minute topping tail candle. Interesting. And here you have a 5-minute red bar reversal. Okay, so that was Cheryl's suggestion. All right, so let's work with that. So we'll use the 5-minute red bar reversal, which I've practiced on before. Now let's go into here. All right, so what did this stock have that we want? The price is between $1.80 and $10. All right, so that's fine. Between 1 and 10 is fine. Consecutive 5-minute candles. Now, at the time of the alert, we didn't have consecutive green candles. We want this right after one consecutive red candle. So let's say -1, and let's see what this says. This will give me an alert when a stock has been down for at least one candle in a row. Okay, one candle in a row. So that would be right around there. So this is a stock between $1 and $10 that has one candle in a row after 3 consecutive green candles. So, all right, that seems to work. 3-bar pullback from the previous high. So relative volume, let's see. At this time, now let's see if LBIX hit our momentum scanner, because if it, oh, let's see, I can't scroll on that right now. If it did, we'll be able to see what the relative volume was. But today had 750,000 shares of volume, and yesterday it had 8,900. So I think it's safe to say a relative volume of 1. We may have to filter that down. The volume today was, or at the time of the alert that we want, would have been, let's see, 76,000, 100, 125. So let's bring this down to 100,000, lower the filter a little bit. Volume on the last 5 minutes, I think 300 would have been okay. So we can leave that there for now. Let's see, volume today we've got volume on the 1 minute. Let's take this one out for right now. Okay, so this is kind of what we're looking for. So we'll look at exchanges, symbol list, that's fine. Columns, we'll leave it all open. All right, so let's look at this. No, oh, we got to take off the new high alert. All right, so now let's go to, okay. So 5-minute red bar, stocks between $1 and $10, and we're going to call this a bull flag, oops, bull flag scanner. All right, so our scanner's down here, and let's see what type of alerts we got on it. We would have gotten on it today. So history, time frame, this morning is fine. So let's see. Time of this alert would have been 10:15. There we go. LBIX right there, 10:15. Okay, now we also have a lot of other stuff, and this whole thing is kind of hard to read. So let's just change the colors on this whole thing. Let's say this is actually calling it a bearish alert, but I'm considering it bullish. So I'm just going to change this to like a light green. I think that'll just be easier to read. Oops, that made it worse. Let's go to properties, select color. That's not what you like to see. Hi. All right, well, let's load it back up. Okay, so let's see. All right. To a new alert window. I'll build this quickly here. Advanced. All right, so we had a lot of alerts on there. So what we might do is change the filter. So we were doing no change, nothing there. That volume's fine. Volume on the 5-minute, we said 300. Maybe we'll increase it to 1,000. See if we get a little higher. If that filters out some of the stuff. 100,000 is fine. Price between 1 and 10 is fine. Now we're going to go back to select alerts, uncheck that one, look for 5-minute. It's definitely a 5-minute bar reversal. Okay, we'll add alert, check that. Let's see, now we've got to go for more. We've got to do consecutive, so you start typing in the filter that you're looking for. Consecutive 5-minute candle, add filter. And we're going to say -1. Right, so we've got this. Now, one thing that we want to think about is that we don't want to see a stock that's giving us, it needs to be holding above our 9 moving average, right? If this red candle dropped all the way down to here, that's not helpful. So let's do a filter for, let's see, I'll type in more again, and we'll do moving average. Now, we don't have the 9 in here, so why don't we just use the 8? That's good enough. And we'll say that we want to see the stock above the 8. So I'll just say 0.1% above the 8, and that'll confirm that we're, kind of right around here, not lower than that. All right, so now let's say, okay, so saying -1 5-minute candle, it means we have 1 red candle. And you can click on the little magnifying glass, and it gives you the definition of what you just told it to look for. Show me stocks where the stock was down for at least 1 candle in a row. All right, so okay. And then we're calling this the bull flag scanner. Okay, so this time I won't change the colors. I'll just deal with it being a little bit annoying. And history was today. So what do we have? LBIX right here at 10:15, which is perfect. So let's look at a couple of the others. We've got GALT, GALT, which we were also looking at. That was at 11:25. So GALT at 11:25. You know what? I wouldn't have minded getting alerted to this, because even though this didn't set up a pullback, it was the right type of setup, right? I wouldn't have gotten in because I would have been waiting for the first 5-minute candle to make a new high. So that's a good idea, worth looking at. USEG at 135. That one, not as pretty, but again, I wouldn't have been trading at 135, so that's okay. PED. This one was at 10:05 and had resistance right at the 200 moving average, so I probably wouldn't have traded it. Now again, is there a way to say, keep this away, don't show this, alert to me if it's near the 200 moving average? Well, we could say don't show if it's within 1% of the 200 moving average. Well, but this is a $1.50 stock. So 1% is only 1.5 cents, right? So then we need to say, well, for this stock, we'd have to say, don't show me anything even near, 5%. But then you apply that to an $8 stock, and it might not be right. So we'll just leave that one out. We can manually review it. WINT, pull this back. This one, not bad. A little consolidation. I don't know if I would have traded it or not. It's a little on the cheap side. I kind of prefer them a little higher price than this, but in any case, there's stocks on this that are worth looking at. So, we could go through and maybe tighten up the filters. Yeah, maybe we say we don't want to see it outside the Bollinger Bands. This is maybe too extended here. But then we look at the A quality setup, and was that outside the Bollinger Bands? Maybe, probably not when the alert went off. So maybe that was okay. But that's kind of what I do. I picture the setup, and then I start dissecting the data points and putting them into the scanner. And then I get back a data set. And now I can look through this data set and try to filter it down even tighter. I could say, well, I want the stock up more because the ones that were only up, less than 10% weren't as good. Or I could say, well, I want to see, I mean, this had a lot of volume on the 1 minute, so maybe more volume on the 1 minute. And I can go into properties, let's see, or I go into configure and I can add so many columns. So I could have like an unlimited number of data points. I can just start adding all of these columns here, and then I can kind of full screen this and see, okay, this is really, the granular breakdown of this stock. This is what it was looking like. This was the RSI. This was, position in the Bollinger Bands. This was the range, and then start to get a sense of, is there a thread that ties together the best of these that are on the data set, right? Or is this just going to be, just something that is not relevant? So again, though, this scanner should only be looking for stocks that have high relative volume, that are in play today. So adding things like the stock is up 10% or more, or the stock has high relative volume. These are all critical things to add to confirm we're not looking at a stock that nobody cares about. We need to make sure we're still focused on the stocks that have, high relative volume, and LBIX certainly did today. So that's kind of my process for building a scanner, is picturing what the pattern looks like, and then trying to translate this into data points that I can search for. All right, so let's see. Did any of you guys want me, or have an idea of a scanner that you want me to build? For those of you who are in the live class, I can see if we have any good ideas here. So, for the most part, you guys have everything that you really would look for in terms of scanning. So here's a request for a flat top breakout scanner. So, all right, so we've got our bull flag scanner. I'm going to refine this a little bit and then give you a version that you'll be able to have on your computers. So we'll have the flat top. So we'll have the bull flag scanner. Now, right now, I do have a let's see, daily bull flag scanner. So again, let's look at a daily bull flag like CYCC. I don't think it was on here today, but what is, or we can look at some of the ones that are on here. What are the characteristics of a daily bull flag, right? It should be up quite a lot over the last few days and then pulling back off the highs, which this is, although it's getting a little weak. CCCR up a lot. Well, today's the first day it's starting to pull back. It's not quite there yet. CETC, this one might be there tomorrow. AKTX, first we're looking at stocks that are up a lot. This one was pulled back in this area, but is now just extended. So, it can be a little bit tricky. What this is looking for, though, if we look at the filters, are stocks that are extended, but that have pulled back off the highs. That's a critical component to a bull flag, right? That we've pulled back a little bit. So if I look at the window-specific filters, I'm looking for the price between 1 and 30, and I want to see that the stock's 10-day range is at least 50%. That means it's moved up or down 50%. That's a big range. The 5-day position has to be at least at the 50% mark. It can't be below its 50% range in the last 5 days. So, if it went from 10 to 20, it can't go below 15. Can't go below 50%. And the fact that it went from 10 to 20 tells us that its 10-day range is actually 100%, which is great. The change from the 8-day moving average and from the 20-day should be above, simply above. We don't want to see it below those moving averages. And that's about it. So right now, one of the things I could say, for instance, is that the position in the 5-day range should not be maybe more than 80%, right? Because we want to make sure that the stock is pulling back, and that might pull off one of them. And this, is saying that it's already pulled back. The high was 22, and it's at 19, so it's already pulled back 2 points. CETC, This one's saying, well, the high was 544, it's at 460, it's already pulled back. So, you'll get ones that kind of squeak through the criteria. But anyway, so let's look at this flat top breakout scanner. All right, so new alert window. So if we're going to do a flat top breakout, what does that look like? So the stock needs to be, let's see, we could consider a new high for the alert. Although I wonder if there's a better alert that we could use. Let's see. Channel breakout. Well, that'll only tell us once the breakout starts. Opening range breakouts aren't going to help us. Let's see. So what if I did NR7? And let's just see. I think this is a consolidation pattern here. So let's try adding that alert. And what we can also do is if there's nothing that really feels like it's the right fit, and you're like, well, maybe I don't want an actual alert. I just want any price, any stock that kind of meets these filters, you can use Heartbeat. And Heartbeat is now no longer going to be an actual alert. It'll be just that the stock meets it just meets your filter criteria. So NR7, let's see. This one, I'm actually surprised when you go on here that it doesn't tell you. Oh, can I do info? Help, maybe. I think this will load Trade Ideas website. Yeah, it is. Okay, so here we go. So here's Trade Ideas. So NR, the NR chart pattern means the last candlestick has the narrowest price range of the last 7 candlesticks. So getting narrower and narrower and narrower. It's not really a flat top. Honestly, it's not really a flat top. That's just consolidation. So let's not use that one. Let's just use Heartbeat. And now let's start working on the filters. All right, so a stock that we would be interested in trading on a flat top. This one is going to need, let's see, definitely volume. The volume doesn't have to be on the last 5 minutes though, because it could be a stock that has high volume over the last like 30 minutes. So let's do higher volume on the 15. Let's say the change is above the 8 moving average. Keep it above that level. 5 minute is fine. 1 minute I'll take off. Volume today, 300,000 is fine. Change from the close should be at least 10% to show it's up more. And then what do 5 minute flat tops have in common? They have a period of consolidation below the high. So let's see if I can do range. This will be an interesting one. We're going to do 2 ranges. We're going to do a 60-minute range that is at least 10%. And then we're going to do a 5-minute range that is less than 3%. I might change it to 5%. Let's start with, no, let's do 3%. That's okay. So let's see, 5-minute range. Where did I lose that? Guy 2. 60-minute range. 5-minute range. Add filter. Okay, so there's my 5-minute range, 5%. So let's do for 10-minute. Let's say that we're actually a 15% range for the 60-minute. Just give us a little more range. And now we need to say, okay, well, that's great, but how do we know we're at high of day, right? position in the range. This is the position in today's range. So if our position in today's range is in the top 75% or higher, then that's good. So let's click the magnifying glass, and this will say the price is at least 75% above the low of this range, which is today's, the low of day. So that's good. All right. So we're going to be in the top 25% of a stock that had a 15% range in the last hour, but is now in a 5% range. So that sounds interesting. We might want to change, bring the float in here. We haven't done anything with float. So let's just add something here for float. So we'll say float is add filter. We'll just say 50 million shares, just so we don't have a too tight. If we start with a really tight filter set, we might get 0 alerts, and then that's, you guys back out from there. So flat top breakout, and hopefully we have enough alerts on this that we're not at like 0. Okay. So let's see. We'll do today. All right, so we've got SITO. That was in the afternoon. Hopefully some others start popping up here. SITO alerted at 3:21. So, you know, was this a perfect flat top breakout? No. Does it kind of get through our filters because it was in the top 75% of the range? Yes. So this one we may have needed to say it's in the top 80%, but it's also not a bad setup. So maybe we leave that one. LEDS was right before the close, and that's just kind of at the high of day. I don't know if that's really a good alert there. GALT, that was at 11:20. Now this is a problem here because it was alerting as it was coming back down. So, but again, this was the same one that we found on the bull flag scanner, and wasn't bad, it just didn't work. So not a bad idea to look at it anyways. DCIX at 10:51. Interesting. We need to add the filter for the price to keep it above $1. Tops 53 cents. We need that filter. So okay, that's that. GLBS at 10:10. Right. This one squeezed up and got halted on a circuit breaker, but it's interesting that it's. Oh, see, this one says it was in a 5% range because it was halted for 5 minutes. So that's why that got through there. CLSN, you know, again, 33 cents, but yeah, it was consolidating in a range, so that's okay, I guess. FPP. So, you know, this one is one that we're seeing a lot of cheap stocks on, so obviously we know we need to go back and change our filter set for that. ENRJ was halted. So, you know, if I go in here, I want to make sure that I add that these stocks are above $1. And I think that I might actually want to change this from a 5-minute scan for consolidation and change it to 10-minute. And that's because we're seeing these stocks that are halted for 5 minutes on a circuit breaker halt triggering the scanner. So consolidation, range will be 15-minute range, I guess is the next best we can do. And we could say 5%. I also noticed that a lot of the stocks we just looked at weren't really as extended as I'd like them to be. So I'm going to increase the 60-minute range to 25%. Volume today, increase it to 500,000 shares. So this will certainly reduce the number of alerts we had today. But maybe if I go and look a couple days back, we'll be able to kind of look at more data and get a sense of how this thing works. And this is the process of building a scanner. You make some adjustments and you go check it. You make some more adjustments and you go check it, and you keep doing that until you've narrowed this down to pretty much only giving you the type of stocks that you want to see. So, today it looks like we narrowed it down just to GLBS, which was, yes, it was up a lot, but it kind of snuck through because of circuit breaker halt. Doesn't really seem like that one should be on there, but I guess it met the criteria. Time frame, let's see. Check on the 7th. Let's see. See if this gives me alerts. I don't know why it's loading so slowly. It might be my connection, but in any case, it kind of gives you a sense of what the approach that is usually the right approach for building these types of scanners. And it also kind of highlights the challenge of scanning for patterns. Really telling the computer what a flat top breakout looks like is not the easiest thing. And we don't have a way of saying, hit the same price 3 times in a row. And what if it hit the same price, but maybe it was within a couple pennies? Would that not count? So there's so many different variables that it simply becomes easier to have a general scanner looking for the stocks that have the most volume right now, or that are squeezing up right now, and let those be the ones that you'll primarily trade off of. This is where you find the setups, and then you wait for the first bull flag, the first pullback, and that type of thing. But I think you guys can all tell that this is a really valuable tool. It can be a little complex, but for those of you watching screen share every single day, you can just watch these scanners right here, the high day momentum scanner, the 1-minute reversal. For those of you who have downloaded Trade Ideas and gotten yourself set up, you can use my scanner settings right here, and you can delete some of the ones you don't want. You could probably go delete parabolic movers and just use the 1-minute, the high day, get rid of that one, and put low float kind of behind this one because it's the same scanner anyways. Do I have 2 versions of this open? I clicked it twice. I was wondering why I was clicking one and I saw another one behind it. That's kind of silly. I don't know which one's going, but yeah, all right, the wrong one, but that's okay. In any case, you can sort of see, when I'm traveling, I usually go and the only scanners I'm using are this one and this one, because I'm on just one monitor or just 2. So I kind of narrow it down to just the scanners that I really like, and then I use that. So let's reconnect, reset connection. All right, so of course you guys can go to TradeIdeas.com to check out the different subscriptions that they have. If you're on a budget, I definitely think it's important to keep costs as low as you can. Those of you who are on a budget probably aren't using eSignal. You're going to use TC2000. TC2000 has scanning, but it's not quite the same. It's just different filters. And the important thing to remember is that you also, while you want to be on a budget and be smart about how you spend money, different tools will yield different results. And so this is a tool being used by probably hundreds of thousands of traders around the world, because these are the same scanners that are powering eTrade Pro. They're used by several other brokers as well. So all of the clients using a desktop platform with those brokers are using these scanners. That means stocks hitting new highs on these, with these, filter sets are going to be, those stocks are going to be seen by a lot of people. That means the first pullback is more likely to get bought up. All right, so that's the important thing with Trade Ideas. I wouldn't try to use a cheaper version. I don't know that there really is one, but I would use Trade Ideas, and we're going to be working with them, I know, over the coming weeks and months to continue to develop custom scanner layouts just for our students. But I have one right now that you guys will be able to download and start playing around with. So the scanner settings are yours for life. You know, they'll be scanners that you download, you have them on your computer. As long as you have an active subscription to the Warrior Pro course, including mentoring, chat room, simulator, etc., you'll be able to download updates anytime I release them. You can check your dashboard to see what your subscription level is. But, you know, I release updates every couple months when I've kind of really beta tested and decided that a new scanner is ready to release. And so I'm going to release another one today that you guys will have, and I'll upload that just later this afternoon, this evening. Okay, so with that, I want to say a couple things. So these are the 3 steps that you can take today to get better at using scanners. Number 1, when you see a scanner alert, always check the 5-minute chart and the daily chart for volume and for support and resistance levels. Okay. Number 2, when you're trying to build a new scanner, try to visualize the pattern and break down the anatomy of that pattern, you know, based on the percentage of the gap, the current volume, all of the metrics that you can see, and then start importing those, you know, into the filters for that scanner that you've made, and start testing, adjusting, and refining. Number 3, as always, don't be a follower, whether it's of me or simply of a automated trading system. Understand why you're taking trades. Own your trades, right? That's independence. That's freedom. And, you know, that's what we all want. So make sure you're really understanding why you take the trades you take, why these alerts come up on the scanners, you know, what criteria those are meeting that allow them to be a stock in play. It's really important for your development as a trader that you can be independent. Now, I know that we're dependent on these scanners in general, but that's kind of like a carpenter being dependent on a hammer. I mean, yes, there are certain things that we're going to be dependent on. It's a tool, but we're the one that knows how to use it. Okay, and if something happens to this tool, I'm sure there'll be another one that would take its place, because there's always going to be a need for scanning, just like there's always a need for hammers and drills and things like that. Okay, so we're going to switch gears and move into the FAQ section for Chapter 9, and I'll make sure I get all of your questions answered. Okay, I'll see you guys there.